This is Morning Stock Watch with a weekly market report for the week ending July 31st, 2020. This report includes the broad market and market sectors, starting with the S&P 500 ETF, SPY. Weekly closing price of $326.52, up about 2% on the week. Looking at the weekly chart of SPY, we can see the chart is presenting a look of, again, potentially changing price behavior. First, looking at the chart, we can see that it's already ridiculously overextended, but price may still have more room to the upside. This week's candle was an important one. This is the first candle since the week of February 24th to close above the breakdown candle high of 323.14. However, still hovering around the bottom range of the weekly channel shown here. And this technically is an inside week where the highs and lows are inside of last week's price action. Yeah, price closed higher, but with less volume. And we see that price has steadily been rising on moderate volume for a casual breakout. Again, we can see that since the lows of mid-March, price has been keeping inside the up channel with a good amount of reaction at those levels, with the upper line being resistance and the bottom being support. Again, price seems like it doesn't want to go too far away from support, which can show that the market is being a bit cautious. The last 3 weeks' volume seem to be diverging a bit from price as it seems to be getting closer to questionable territory. This week shows the largest candle spread, but the smallest volume of the 3 weeks. Last week we had an inverted hammer, but we suspected price to break upward due to the lack of volume that would have prevented an immediate reversal. The daily chart shows a lot of proof for a coming dip in the market. Again, we can see price has made it back above the highs of the breakdown candle on February 25th, but with expected negative divergences on the oscillators and a pretty quiet MACD histogram. The quiet-looking MACD histogram is also a huge hint that a large move is possibly going to be happening real soon. Friday's candle shows a green hammer candle with high volume, along with the negative divergence from the highs of June 8th and July 22nd. This chart is definitely showing preparation for downside, but exactly when is not necessarily easy to pinpoint each time. Looking at the 11 market sector ETFs and simply looking at the weekly candles in comparison with the S&P, the Nasdaq, which was already at its all-time highs, has a more pronounced rolling over look with high volume spinning top and inverted hammer on the weekly chart, along with some strong overbought negative divergence. The daily chart, there are multiple areas of negative divergence that could play out back below support at 10,000 or lower. However, the rest of the charts besides QQQ and XLK, there hasn't been any noticeable increase in volume in recent weeks. As a matter of fact, most of the markets have decreasing volume as the majority of them move higher. They only show that the markets are actively searching for the next target number and what it does once it gets there. Now, let's look a bit closer and see where the S&P could actually be going. As always, there's 2 sides to every trade. The idea is to be on the good side of the trade more times than not, with each trade having limited risk. So let's see where this thing can go. From what we know so far, we see that from the SPY, the market can easily continue higher or lower from its current position. Looking at the weekly SPY chart alone, it gives us the impression that it can easily pick up momentum for another crack at all-time highs. A lot of people want that to happen. There's also a lot of people that want the market to come down because it's overextended, too expensive, the economy is in bad shape, etc. If we do continue higher, it would be favorable to at least see price remain above the support line with continued moderate volume. This would create a vacuum right up to 333.60 or so. And if that happens, what would stop it from making all-time highs? On the flip side, what if price doesn't make it higher from here and all these divergences start to play out? Well, we have plenty of support here, but if it breaks, that will be the first time in a long time. And likely, we'll see at least something around 300 for the first round. If you found the support useful in any way, please give a like and subscribe. Thanks for watching, and hope to see you next week for another weekly report.